Ladies and gentlemen, we just got some massive news out of Germany. They've officially entered recession as the economy, the consumer industry is collapsing. Many people warned that this day for Germany would come, but they were very complacent and very prideful, saying it would never. And if you didn't know, Germany is the biggest economy in the European Union. So if Germany goes down, the whole of Europe will be going down. And if Europe goes down, that's going to spell big trouble for the rest of the world and global demand and global growth. And people, if you think it's not going to happen in the US and Australia, etc., it definitely is. This recession is going to be a global recession. And I think, for example, the US is in recession right now, but they just haven't made it official yet. And when I actually got into this report on why Germany's economy is collapsing, I was shocked with what I found. So everyone, it's time to listen up to see what's really going on in the global economy. Start paying attention so you can look for clues to see if this is going to happen in your country next. So let's not waste any time. Let's get straight into the news, the facts, and the data. So look at this, everyone. Germany endures first recession since COVID, and they're saying it's only because of the consumer. But when we get deeper into this report, you're going to see they're failing on all levels. So first quarter output shrank by 0.3% from the previous 3 months, following a 0.5% drop between October and December. The statistics office said Thursday its initial estimate last month was for stagnation. So of course, by all standards of definition, this is a recession. But I think if this happened in the US, Biden would just say, well, look, you know what, unemployment's really low, so there's no recession. But one of the key reasons why this is happening is the consumer is tapped out. Energy prices have actually skyrocketed in Germany because they've closed down all their fossil fuel plants, all their nuclear power plants. They've tried to make a very quick transition to renewable energy, but it hasn't worked out. This means consumers are spending so much money of their energy, they don't have much money left over to spend out there in the real economy. The reluctance of households to buy was apparent in a variety of areas. The office said in a statement, households spent less on food and beverages, clothing and footwear, and on furnishing. They also purchased fewer electric cars as incentives were reduced. But again, this is just the beginning. They're failing on all levels. Elsewhere, there was a plunge in government expenditure while investment was up, aided by construction and seasonally warmer weather. So we can see with this chart here, everyone, we can see in the December quarter, it dropped 0.5%, and in the first quarter of 2023, it dropped 0.3%. Now, the key reason why Germany is in a recession now as well is because the GDP data was revised down. And now they're saying because it was revised down for Germany, it's going to be revised down for the whole European Union as well. The scale of downward revision to German GDP data means Euro area growth is likely to be revised down lower in the first quarter. Other things equal, it would point to the region's economy having stagnated at the start of 2023, but other downward revisions could well tip the rounding and place the region in a technical recession. Now, this is all just technicalities, everyone, but when you look at the real picture, if the average consumer can't afford the basic essentials like rent, food, utilities, transportation, etc., we are in a recession. And what many people aren't taking into account is they're having negative GDP right when inflation is at its highest. So when you factor in inflation, it's more like this negative growth of 5%. And this is what we call stagflation. But what's going to make it really worse is when the unemployment rate finally ticks up. And unlike all other times in recessions recently, they've been able to cut interest rates, while recession is still sky high in Europe, even worse in the US, so they can't do that. And the European Central Bank, they don't just take into account what's happening in Germany, they're going to keep on hiking interest rates, like they said, to bring inflation down. In Germany, companies like Zalando SE reflect the flagging consumer sentiment. The fashion retail saw inventory levels driven higher in the first quarter by falling demand. Domestic car orders, meanwhile, were down by about a third between January and April, according to VDA Auto Industry Association. So we all know the auto industry is a key industry in Germany, and they're saying demand is falling by a third. This is because interest rates around the world are skyrocketing, and people simply can't afford to take on these loans to buy these brand new cars. And also we're seeing a huge amount of demand come away since we saw a lot of people bought their new cars already in 2020 and 2021. But a massive indicator to show that the economy is going to get worse is the manufacturing sector. Look at this. So as we can see here, the HCOB Germany manufacturing PMI index has fallen all the way down to 44, and anything under 45 is recession, and this is the lowest it's been in 3 years. Now, goods demand is cratering as consumers faced with elevated inflation prefer to splurge on leisure and travel. That's making economic growth increasingly uneven, a trend some analysts say isn't sustainable. So what that simply means is the rich, they're still doing okay. High inflation, that normally pumps up their asset prices, but the middle class and the poor, they're struggling and they only have enough to spend on food and rent. The optimism at the start of the year seems to have given way to a more of a sense of reality. A drop in purchasing power, thinned out industrial order books, as well as the impact of most aggressive monetary policy tightening in decades, and expected slowdown of the US economy all argue in favor of weak economic activity. That's exactly right, everyone. Even though interest rates aren't at the level they were in the 1970s, the thing is, debt is 4 times higher than it was in the 1970s. So for example, 5% interest rates is equivalent to what 20% interest rates would be because the debt is nearly 4 times higher. So that means every single interest rate hike is much more painful. Now, a lot of people may be optimistic saying the recession is over, it's going to get better in the second quarter, but a lot of banks and economists are saying it's about to get even worse. For economists at Commerce Bank, a second half recession now looks likelier than the rebound most of their colleagues continue to forecast. But that's just the first piece of the puzzle, and I wanted to go even further and keep on researching to see what consequences this is going to have for the rest of us. And this is what I found. So look at this, everyone. Europe's economic engine is breaking down. Germany is at risk of a long, slow decline with consequences for the whole of the EU and the rest of the world. Now, again, the reason why this is so important and so critical is Germany has been Europe's economic engine, and they've been able to pull them out of crisis after crisis. But now with Germany in recession, they're not going to be able to help the rest of the European Union right when they need it most. But what's led up to this recession has started decades ago. And again, this is Germany's big failure on their energy policy. And I think if you remember, there was a certain man in office in the US that tried to warn Germany about relying too much on Russia for all their energy, and they just laughed at him. So decades of flawed energy policy, the demise of the combustion engine cars, and sluggish transition to new technologies are converging to pose the most fundamental threat to the nation's prosperity since the reunification. But unlike 1990, the political class lacked leadership to tackle structural issues. And did you know that economists are now saying Germany's economy is going to be the worst performing out of all the G7 nations? Because we can see with this chart here, everyone, they see Germany's economy still in a recession. Then we have UK, they're going to be the second weakest, followed by France, Italy, Japan, Canada, and they're actually saying the US is going to be the best performing, but time will tell. Germany finds itself ill-suited to sustainably serve the energy needs of its industrial base, over-dependent on old-school engineering and lacking the political and commercial ability to pivot faster to growing sectors. The array of structural challenges points to a cold awakening for the center of European power, which has become accustomed to uninterrupted influence. So this is a classic case of Germany becoming very, very complacent. They've had a lot of prosperity. They've had a booming economy. But eventually all empires come to an end. The most pressing issue for Germany is getting its energy transition on track. Affordable power is a key precondition for industrial competitiveness. And even before the end of Russian gas supplies, Germany has some of the highest electricity costs in Europe. Failure to stabilize the situation could transform a trickle of manufacturers heading elsewhere in a stampede. And we're already seeing this happen, everyone. A lot of companies, they're leaving Germany because it's just too expensive, with again, one of the highest energy costs in Europe. Because we can see this chart here, natural gas, we can see it's 0.31, when G7, excluding Germany, is 0.12. So again, it's nearly triple that. And also electricity prices are nearly triple as well. Germany is 0.76, when excluding Germany, the rest of G7 is 0.28. Now, they have tried to transition to more renewable energy like solar and wind turbines, but this has been a big failure. After shutting its last nuclear reactor this spring and pushing to phase out coal as soon as 2030, the country installed around 10 gigawatts of wind and solar capacity last year, half half the pace it needs to hit its climate target. Now again, people, this is why this propaganda with this climate agenda is getting out of control. Yes, we need to help the environment. Yes, we need to help the climate, but we need to do it at an appropriate pace, not cut off all nuclear power and coal power plants at once, because now we're going to have a lot of Germans get very, very sick and have a very, very cold winter. And that's why we can't let them throw these crazy mandates throughout the rest of the world. We need to do a more sensible approach. And the thing is, for some countries, these kind of renewable energy sources are completely unreliable. The bitter reality is that the resources for generating that much clean power are limited in Germany by its relatively small coastline and lack of sun. The country is looking to build a vast infrastructure to import hydrogen from the likes of Australia, Canada, and Saudi Arabia, banking on technology that hasn't been tested at this scale. That's another thing, everyone. This hasn't been tested. This is just all an experiment, and I think we all know how it's going to go. We've seen these wind turbines in Australia. They've been completely unreliable, and it's been a big waste of money. So while brands like Porsche and BMW define the combustion engine era, Germany's electric cars have struggled. BYD Co. overtook Volkswagen to become the best-selling car brand in China last quarter. Key to its push was an electrical model that costs around a third of Volkswagen's ID3, but offers greater range and connectivity with third-party applications. Now, another big problem for Germany is, like they relied much on Russia for their energy, they're also relying hugely on China for trade. Much of Germany's wealth and social order rests on a vibrant manufacturing sector that provides well-paid blue-collar jobs. But that strength has led to dangerous dependencies on overseas markets for orders and raw materials, above all, China. Like other democracies in aftermath of Russia's invasion of Ukraine, Berlin is now trying to unwind its reliance on the Asian superpower, but Germany's biggest companies aren't paying heed. Well, it's probably because if they do pay heed, they're going to go bust. So we can see in this chart here, Germany relies on industry more than any other G7 country. And Germany's two biggest banks, Deutsche Bank AG and Commerzbank AG, have been mirrored in controversy for years. And while they're on the mend, they're still undersized compared to Wall Street peers. Their combined market capitalization is less than a tenth of JP Morgan Chase. And another great chart we have here, Germany's biggest and most imbalanced trading partner is China, and the country's trade deficit with China was 84.9 billion. But now a massive risk for not just Germany but also other Western nations, and this is something I don't hear many people talking about, is an aging population and a huge demographic shift. Now, this is bad in most Western countries, but in Germany, it's even worse. So we can see this chart here. Germany's population is shrinking and getting older. Look at this, nearly 30% of current workforce is set to retire by 2036. This year, more than 1 million Germans would reach retirement age, about 320,000 more than those becoming adults. By the end of the decade, German Employment Agency says the shortfall will rise to as much as 500,000, roughly equivalent to the city of Nuremberg, adding to the strains on the economy. So this is just simple math, everyone. In the future, there's not going to be enough workers. There's not going to be enough young people to pay for all these people's retirement, and these pension funds are going to go bust. And also a lot of older people that don't spend as much in retirement, so it's going to be more downward pressure on Germany's economy. And again, this is happening in the US and Australia as well. In a recent report, the OECD put the scale of challenges in stark terms. No major industrial economy has ever had the very basis of its competitiveness and resilience so systematically challenged by changing social, environment, and regulatory pressures. That in turn will ripple across the whole continent. The health of Germany's economy is crucial for the broader European economy and blocks harmony and solidarity, he said. So everyone, this is absolutely massive, and we all need to pay attention to what happens with Germany, because this is going to decide Europeans' fate. And with the global economy and the financial market so interconnected, when one huge major player goes down, it's going to affect all of us. But everyone, what do you think about this? Let me know down below. Now, for all my loyal viewers and subscribers that are watching, you're awesome. Thanks for watching. I'll see you all in the next video.